Hey, welcome back, trader friends. And it has been some time. Boy, did I miss all of you and Axel as well. How are you?
I'm all right, thank you. Angeline, how are you?
We are good. I'm so pleased to be back, and power to the people. And we are all counting down together now, 49.50 at loads. It's now open. Let's go. Here we are, and we have a bit of caution to start off with. FTSE still having its nose above that 10,000 mark there, but just. Let's have a quick look first at the movers there. Right, let's have a look. Axel, take us through the biggest winners first.
Well, we've got miners again, haven't we? At the very top, as we can see. That's not surprising, given that the gold price is trading in all-time highs, above $4,600 per troy ounce. It doesn't stop moving higher. I think we're going to go towards 5,000 this year, but I've been saying that since last year, haven't I?
Exactly, yeah. You and Peter Hambro and Simon Popple and John Mayer as well. In fact, the party that's begun so early. I am, as you know, love commodities. I'm slightly concerned the party's got going too quick, too soon. Peter Hambro's call for 5,000 was for November, by November this year, and we're already 4,600. So yeah, no surprises. All the miners there for us. Neo, Antofagasta, copper, big thing as well. It's been rising since the last quarter of last year. What else catches your eye, Axel?
I mean, difficult to see here really. BAA Systems, but that's probably I don't know what that might be.
That might be from all the defense.
I was going to say, but
news coming out. You would have thought it might have petered off last week. But,
well, yes, that's what I would have thought. But then again, we've still got the whole Iran situation in Venezuela hasn't been resolved at all, has it? Even though the Senate doesn't quite agree with Mr. Trump's way of handling things. But yes, I would have thought that this morning it would peter off a bit, to be honest.
It might do. But interestingly enough, there is a thesis, which I'll get to a bit later on. Remind me, trader friends, because we will talk about this thesis that is emerging out of that sector. Let's take a look at some of the other movers there. We've also got Rolls-Royce. This might be down to that thesis I'll talk to you about in a bit as well. And let's move over to the losers.
So here we've got cyclicals, which is kind of surprising because they've done really well. I mean, banks, but that might be ahead of earnings season because we've got US banks reporting this week, start of Q4 earnings seasons for last year. And yes, I mean, Standard Chartered as well. So we're seeing some rotation, or seem to be some rotation, early morning rotation out of banks, financials here, which is kind of surprising because if you look at European markets, banks are doing very, very well. I mean, and that's really interesting. I looked at it this morning. The Stock 600 has actually done better than US markets last week. So we've got small and mid caps doing really well in the States as well. But in Europe, we're now at the highest level from an overbought perspective, technically speaking, for the last 10 years. So again, as you just said with regards to gold, equities seem to be perhaps jumping the gun a bit and being really aggressively bullish at the beginning of the year. And I know everybody thinks, oh, it's great, it's going to continue like that, but nothing goes up in a straight line. So I'm slightly concerned here.
Yeah, that's right. And what we've seen as well is, like last year, if it's history repeats itself, or certainly rhymes, you're going to have to like bite on a stick for longer than usual, sometimes waiting for that correction or for that bubble to kind of like correct itself. I found anyway. Also, let's have a look at across to France, because we've also got a lot of movers there. Eurofund, L'Oreal and Thales also higher there. Publicis and Hermes also slightly higher, but it looks like it's more so a down day.
Well, it's not surprising. I mean, look, last week was a very, very strong start to the year globally. I mean, we had new record highs in Asia. We had them in the US, the S&P, the Dow hitting new record highs. In Europe, we've had new highs. The DAX, if you look at it, it's absolutely crazy. It's just powering ahead in Germany. So to have some profit taking, especially now that the US government is pursuing Jerome Powell for a $2.5 billion refurbishment of the Fed building, when the White House has got its own extensions being done, etc., is kind of strange in a way. But yes, we're worried about the Fed no longer being independent. Maybe that's put a little dampener on the markets this morning.
Yeah, and I find that story interesting and intriguing because it's not like he's going to really benefit from all of that. I mean, he's outgoing, so it's all a bit crazy. Let's have a look at Germany now, because this will take us neatly into that thesis that I had, moving to the losers first, because it's a down day, a down start so far.
So we've got insurers here, Allianz, as we can see. But interesting enough, also automakers, BMW and Mercedes. That I am slightly surprised by. Volkswagen as well. Is there something I haven't seen?
Not at the moment. I mean, it has been quite an interesting session in terms of, the narrative over, the Powell investigation, tensions surrounding Iran. But I can't see anything out there. Trader friends, if you see anything, please let us know. Checking on the word on the street and also downgrades and upgrades, not seeing anything on the autos.
Yeah, neither have I. So that's a bit surprising because we've got everything in there, even Porsche. So yeah.
Let's have a look at the winners. There we are. Rheinmetall up 1.3%.
That's not surprising.
Yeah,
given defense again.
Yeah.
So.
Bayersdorf, Fresenius as well, and Heidelberg Materials is the other one. In terms of some of the upgrades, downgrades that we had earlier today, we had Babcock, Halion, Informa as well. I know some people here have got that. So are you ready for my thesis? This ties in with the week ahead, because we're going to see more details, in terms of geopolitics out of Tehran. So there is a real vibe out there that I'm sure you've seen the memes of Denmark surrounded by Lego, right, after Greenland, that if Greenland, whether by force or not, and I'd love to know your thoughts, I'd love to know yours as well, right, the thesis is if Greenland, whether by force or not, somehow is in US control, that means NATO is dead. This is a thesis, this is not trading advice. If NATO is dead, then China will take Taiwan, because the rule of law no longer exists, as it were, and it's a new order. And so it's no surprise if all this is being spoken about in the hallways and in the ranks of the defense industry, then that is no surprise that the defense stocks are still higher today. Any thoughts?
No, I totally agree. But don't you think that's already been happening with Venezuela? Yeah. Basically, Trump has just changed the world order that we've had for the last 40, 50 years. And yes, I mean, if I were China, I would argue, well, if the US does that, why shouldn't we? Because they actually think that Taiwan is part of China anyway. So it's a totally different story, whereas Venezuela is a different country to the US. So yes. I mean, it's not surprising defense stocks go up. Also, if you look at the military spending in the US, I mean, I don't know how many trillions it is now, but it's unbelievable. And clearly, Donald Trump seems to be on a mission to make sure that the US Army and military remains the biggest in the world. I mean, he's investing a lot of money, not just into the Navy, because China, I believe, now has more warships than the US. But also into the Air Force and other military. So yes, I'm not surprised defense stocks go up. Also, if you look at the world order in general, we have, I think it's now over 40 countries which have wars everywhere or clashes and things like that. So there's a lot going on globally.
Yeah, that's right. And also checking out the rest of the commodities complex for you, because we are seeing quite a few moves here. WTI was really oscillating in that 110 range, peaking at around just under 60 really before coming back off there. Gold, as we talked about earlier, surging and getting its nose above that 4,600 number. This is down to Fed independence fears and geopolitical uncertainty. And silver, my goodness, hi-ho silver. As Axel knows, I often march over to him and double check. I always like people poking holes in my theory. Silver, I am back in after liquidating in October last year and then coming back in after that. But it's almost like nothing is holding silver back. It's incredible.
Well, I mean, in silver, you've also got the industrial story. And I think that may lead it to rise more than just gold on its own.
Here's the monthly.
Because basically what you're now seeing is we need silver for everything from electric vehicles to solar panels to all kinds of industrial uses. And therefore, yes, it keeps on rising, not just for sort of safe haven flows like gold does, or on geopolitics, but on its own also, just from a demand perspective, silver is likely to continue. And the amazing thing here is, technically speaking, the late December sell-off we saw, for me, that big red candle there usually would form some sort of minor top, like we saw earlier in the year. But it hasn't. We're just powering ahead. And as I said last year, I mean, for me, silver is aiming for the psychological 100 mark. We're looking for round numbers everywhere. If you look at the Dow trade of the week from last week, I went long the Dow. Target 50,000. Why? It's a round number. Markets tend to gravitate towards these round numbers. And it's the same with silver, in my opinion.
Yeah, and don't forget, this is not just behavior, but also, how algos tend to work as well. But have a look at the DAX as well. I mean, the first week of the year has been quite incredible, hasn't it?
It has been. It's so strong. It slightly worries me because we're starting to form these wedge formations here, for example, on the DAX as well. We see it on the Dow, we see it on a lot of stock indices. And that in itself doesn't mean it is a wedge. And a wedge, if people don't know what it is sort of it looks like a wedge, basically. You're making new highs, but the distance between the highs and lows within that pattern becomes smaller and smaller. And that quite often can lead to a reversal if you fall through the lower support line of that wedge. Now, we haven't seen anything like that happening, but tomorrow's CPI data, which is the first real data point we've seen, or we're going to see from the US since the government shutdown. So I think a lot of people will look at CPI in the US, and we will see whether that will change the view we have at the moment, because now we're pricing in 3 rate cuts this year since last week's unemployment data. Can we actually persist with that? Or could we see maybe just one? If that were to happen, I think the whole bull market we've built so far might actually become far more fragile.
And that would be key. Big week for inflation. Of course, the CPI number is Tuesday, is that right?
It is, yes,
yeah,
tomorrow.
Tuesday. And then we are getting this as well when it's relatively light data-driven docket from Europe. So just be aware of that, because it means the market moves might be driven more on geopolitics and US politics and data, likely to dominate after that mixed, slightly softer labour print as well has put a spotlight on the Fed reaction function. What else are you looking out for this week?
The oil price. Because, as you know, I'm a perma bear on oil and have been all of most of last year. Simply because there is so much supply there. And yes, we've seen the rally last week because of geopolitics. And we do see these rallies, and we warned of them because we were bouncing off that really, really big support area on Brent, on WTI. But I think I'll actually do my trade of the week this week on Brent crude oil, because I do think that the trend, the overall medium-term downtrend, is going to resume in the near future once these geopolitical tensions quieten down. Now, with regards to Iran, they may not, I don't know. But are we that worried about Iran? Perhaps less so than Venezuela. I don't know. I mean, it's the honest answer. But from a technical perspective, when you see these sort of rallies, and on Brent, if you see a sort of a zigzag formation or an ABC pattern in Elliott wave terms, which we're seeing here, quite often that then is followed by another resumption of the trend. And in this case, a previous trend is down. So
nice. So talk us through your trade of the week. I've got Brent up here.
Yes, so Brent, if you zoom into the last 3 weeks from the bottom we've seen here, what you can see is this ABC pattern I'm talking about. So we've got the move up from the low we saw in December, that move up exactly to that high in the middle of there, and then the move back down again towards the beginning of January low, and then we see the last leg up, which is the C leg, which is the current move back up again. But can you see where we stopped? We've got these previous highs just below $61 or so. I've got some slightly higher ones just in case of geopolitical heightened tensions driving the price in the short term higher. Because the problem with Trader of the Week is I have to come up here every Monday and come up with a trading idea. And by the way, I never, as you know, traded. So trader friends, I don't trade any of these setups myself, not a single one over the last few years. Because basically you can get better setups. It doesn't work like this where you sort of come into an office or into your trading day and say, okay, at 9 o'clock every Monday I come up with this idea. Markets don't work like that. It might be on a Tuesday, it might be in the evening on a Wednesday, it might be at 7 o'clock on a Thursday. So you can't just force the market to do what it wants on a certain day at a certain time. Having said that, I have to come up with these ideas for our trader friends. And that's why I try to always have a slightly wider stop to give myself room, because in the short term, obviously, things can still move higher in this case, because in the last few days, we've risen quite strongly with regards to the oil price.
Let's have a quick reminder as well as to some of the sector drivers that could drive markets this coming week. We've already seen miners and higher because especially energy as well. So this is in the commodities sphere because of this Iran risk, which should keep integrated oil majors like BP, like the Shells, Total Energies in focus. So keep an eye on what's happening geopolitics-wise, as well as you are watching and potentially trading Axel's Trade of the Week. We've also got defensives and industrials. We talked about this earlier. Rolls-Royce recently hit fresh highs, supported by defense exposure and a constructive FTSE tape as well. FTSE, I mean, it's second day, was it, of the year, crossed that 10,000. Are we likely to see it keep its nose above 10,000?
Well, it depends on the time frame we're looking at. Again, we've risen very, very sharply, very quickly. And can we basically keep up that momentum that we've seen in the first week of January? But that doesn't just, that's not just the case for the FTSE, it's the case for all of these markets. So I think earnings season kicking off this week with US banks is going to be key. I actually think that it's quite likely that the analyst expectations might be beaten, because the government shutdown, did it really cause people no longer to spend their money in the US? I'm not sure. I mean, if the government shuts down, fine. Yes, you've got a lot of government workers, but you've got other people as well, and they keep on living, don't they? And they still have their bills to pay, they still have their investments to make and so forth. So why would the whole US economy suddenly stop because of that? There might be a slowdown, but I think it's been priced in so much that we could see some upside expectation. The question is, can we see the same in tech? Because as we know, tech is underperforming. We saw a rotation out of tech since October of last year. That continues this week. It continued last week when we basically saw rotation also out of US stocks, mainly tech stocks, into, as I said, the Euro Stoxx 600, which is now at a 10-year overbought level, technically speaking. So will that rotation continue? Could we see a disappointment in tech earnings? Because after all, we expect these really, really high earnings all the time. And even if they slow down a bit and they still make a lot of profit, these big companies, you could still see a negative market reaction like we saw in November.
And that's also key points to remember, because this week we have an amazing lineup for you. We've got Julian Wheeler. I heard you, Steve. I heard you, Fire Tuck, as well. I know that you're sending a bottle to Julian because of one of his calls. But we will get him back here so that you can put your questions to him. That is, I believe, tomorrow. I've got a CEO coming in as well, Ben Club from Energy Pathways, and also we've got a third guest. Is it, I hear in the gallery, is it Simon Popple? I'm just saying this because poor Phil has been losing his hair trying to squeeze in all my guests for me. He says, not confirmed. We're trying to squeeze Simon Popple in on Tuesday as well. What's your week looking like, Axel?
Busy as always, but I think it always is the case for everyone trading, especially after the week we saw last week.
That was crazy, wasn't it?
Yes, basically
Everyone
what I'm
thinking
doing
about a quiet week back.
No.
It was not quiet at all.
I mean, if you traded it from the long side, anything, then, you know, when I say anything, commodities, the dollar even going up last week, equities globally, then maybe move your stops closer because I just can't see it continuing at the same pace it was rising last week.
Yeah.
Especially with CPI data coming out, especially with earnings later this week.
So would you say for those that have, put it on this second reaction low, for example, if they're going long, then maybe move it to your first reaction low?
Perhaps. I mean, that's, for trade of the week from last week, for example, as you know, we went long the Dow. It made new record highs. It looked perfect. On my chart, we're sort of struggling around 49,500. My target was just below 50,000 because of the round number. And it doesn't look like a double top to me here. But if you look at the chart, just from the safe side, because we went long here, sort of 48,400 something, yeah, just move it up a bit. And, at worst, if you get stopped out, you make 1%. If you get out now, you made about 2.5% to 3%. It's not bad return, is it, on 2% investment for the first trade of the year? And by the way, as people know, watch this show, we never risk more than 2% of capital of your trading capital available to you per trade.
That's right.
And we always want to keep it small. But yes, I mean, for me, that doesn't look like a top. So I wouldn't be surprised if we have another sort of spike higher towards 50,000 and then maybe a reversal. So it could be one of those, where intraday just goes up and then it comes down again. Maybe tomorrow with CPI. Who knows? I mean.
Yeah. So make sure you got tight stops. Make sure you've got your risk and your controls align with your risk profile. It's been so great having you back, and everyone on the show as well. I've been looking at your Discord chats and your comments over the new year, and it's so lovely to be back with the community here at IG. We will have more for you during the week, and we'll try as much as possible to flag it to you, but as you know, you guys get it here first on Discord, so keep watching. Yep. Right, let's go to Trade of the Week, because you have got a special treat for us.
Do I? I don't know. I think I've got an interesting trade, and that trade is to go short oil.
Okay.
Not any oil.
No surprise here, Axel, because all of last year you've been talking to me about, oil, still shorting oil.
Yeah.
Okay.
And what I think we're seeing is what we saw basically around October, sort of a spike higher. And I saw an ABC correction, so a zigzag correction on Elliott wave terms. So this is the A wave here, B, and then C. And you can see this distance here is similar to that one there. And if it is indeed one, it may fail a previous resistance, and then you have a resumption of the trend. And as we can see here, the trend has been pointing down for quite a while now. I mean, actually since June of last year. So for that reason, and also because geopolitics have driven the oil price higher, we still have a lot of supply from a fundamental point of view. We still have mediocre demand, but because of these fears of supply perhaps diminishing, because we don't know what Venezuela will bring, we don't know when US companies, or if they can actually go into Venezuela and fix the infrastructure and get that oil out of the ground. Well, for those reasons, it's more likely, in my opinion, fundamentally, that basically the downtrend will continue because there's just too much supply. Technically, as I just said, I've got this pattern. We also have a lot of resistance here. So for all of these reasons, I would like to short probably Brent crude oil around current levels, around 63. But I want to have a relatively wide stop. Now, what I mean by that is, if you can see here, we've got a lot of resistance going all the way back to the lows seen in October here, beginning of October. And then we've got more still up here. Let me just go back. You can see all of these lows here, August, September, and so forth. So I would probably place my stop above all of that, above all of these highs. And yeah, so I would probably place my stop above these highs here. So probably the high here from the 9th of October at 66.40, let's say, as a stop, just to give ourselves room in case we see a little bit further up move here. And then the downside target, well, this is an interesting one because we've had really good support around the $60 mark here on the daily financial bet, all the way down to the low seen in mid-December, around 58.60. So probably around 59 here would be my downside target. So the reward to risk ratio is not that great. It's probably 1.2, 1.3 in your favor, but it's still in your favor. It's still in the direction of the trend. And for all the reasons I've just mentioned, technically and fundamentally, it might be a good setup.
And that downside target also lines up, if you go further back on the daily chart, down to the support that was seen in April and
May. Yes. Correct.
Yeah. I like it. So what are the situations where, all bets are off? Is it the case that Trump-Fed tensions in Iran start roaring? What is the caveat?
Well, that would probably drive the oil price higher, yes. I mean, if we do think that there is going to be a supply risk, then yes, because of fear that the oil price could rally quite drastically. And we saw something similar happening back in June, if you remember. We had this really sharp move higher here. So you never, you never know what the future will hold, and these sort of moves can easily happen. But even then, can you see it came back down again? So for me, I would just get stopped out, wait for it to run its course, and then resume the trend. That's the sort of approach I take. I always try to trade in the direction of the trend. So yes, I mean, that's why we have stop losses. That's why we only risk 2% of capital per trade.
So I always have a rule here. And feel free to disagree because everyone's got a different trading style. So I don't put on a position unless I put on a stop as well. So that is just the and rule. But, obviously play with the where your stops are depending on your conviction. But I don't like putting on anything unless there is a stop so that I can sleep at night.
I do exactly the same. And the great thing is if you're spread betting, you can have a guaranteed stop loss. So if you have a larger position, then with IG, what you can do is have a guaranteed stop loss. So even if you have a flash crash or something like that, you know exactly what level you're going to get stopped out. Yes, you will pay more in terms of spread if you get stopped out, but it doesn't cost you anything if you don't.
Yeah.
So just have a wide safety net stop somewhere, like an insurance policy, if you have larger positions, because markets nowadays tend to be far more volatile, and we have more flash crashes than we did 30, 40 years ago.
Yeah. And we have got some loose cannons in the political sphere, which could turn markets on its head any given moment. So make sure you have your risk, you understand your risk profile, and you take those precautions. You heard me talk about this with Axel and also with Tiru here when I was about to go on holiday last year, and I had a big position on silver, but I didn't want to lose all of my position. So we spoke about it, and I came away thinking, well, there's nothing stopping me putting on a trailing stop.
Exactly.
Yeah. So there are lots of gadgets out there on the IG platform. So make sure you make full use of it. Right. We're going to have to get to some of the latest news that is just coming out right now. But you know where you can always reach myself and Axel. Do give us a shout. We're back online, especially myself. I think Rich is back sometime tomorrow. But do still email us on ask@ig.com, and we will try and make sure we get your questions answered. Until then, have a great day. Lovely to see all of you, and whatever you're doing, may the odds be stacked in your favor.